Good morning. This is Ron Janish with andrewscourse.com, and this is the 18th of September, a Sunday morning. Now, you may be wondering why the heck I'm putting out a video on Sunday morning, because it's, for the most part, pretty much the same as what I might put out Monday morning. This way I get to sleep in a little bit Monday morning, and since I'm already awake today, you might as well here go ahead and do it. Okay, what we have in front of us right here is the sugar chart, and we'll talk about this in a moment, but there's two other ones that I really want you to focus your attention on that I'm not going to draw the lines for. I want you to take your own know-how and apply your know-how to them, and that is the Canadian dollar and the Treasury bonds. Okay, those are two that I think we could have an entry signal in early this week. Okay, moving on to the sugar. Well, if you remember, when sugar was down around here somewhere, we wound up buying a bunch. And actually, let's see what happened. Prices went up and they came back down. When they came back down, we wound up buying a bunch. And that's because we missed the uh, the buy signal going up because I don't have this automated. If I have this automated, then that's a whole different story. So we missed that. So what happened was we put a limit order in and said, okay, well, if it comes back down, we're going to buy some. And we did. And and it just kept on going up. And I was going, oh, how sweet it is. And it kept on going up. And it went past the median line just beautifully. And on Friday, it was not only past the median line, it was past the far parallel, and then right up here, it wound up, well, it was like to warning line number one. You know, if you imagine these spaces here equidistant into the future here, that'd be warning line number one right around this area here. So what happened was, even though I think this has more time to go, um, wound up pressing the flatten button, and I'm out of here. Took a very nice profit, and that was the end of that. Okay, so much for the sugar. Now I did put on a new position, and we'll get to that in a moment. But in the meantime, we've got the Australian dollar. Uh, let's take a look at something. Yeah, and these are, I don't know if these are the right median lines to use, but these are the ones that I have on the 1 hour chart. So let's see what happens. As near as I can tell, the Australian dollar still has more time for the downside. And the same with the New Zealand dollar, probably going more time to the downside. Okay, and once again, we have the median lines drawn in here, and a median line that's probably more interesting is this one here. I'll show you. Soybeans, look at this guy. Prices went right down to it, touched it, reversed, and then we had one of these divergence things. If you send me an email, I'll send you a link that'll get you a free thing, and this is magazine that wrote an article about divergence and median lines, and actually I wrote the article, and I'll get you free entry into it and all that good stuff. Just ignore the other junk. Of course, since it's free, there's a bunch of other junk, so the good part is my article which focuses on that. And so right now we're up here at the parallel. As you can see, the big hefty number here that was in the P&L open column last week when prices were down here has shrunken quite a bit, and that's that not so wonderful thing called down draw. That's around about 80% of the time in trading, and so the theory is that there's more time to the downside. We'll just have to wait and see on that. Okay, now let's move on to crude oil. Remember crude oil? Oh, yeah, open is a big number, and still looking for more time to the downside. Might be done by Monday, Tuesday this week. We'll just have to wait and see what happens. Here's a new one for you, cotton. As you can see, the PL open and PL days are both red. Well, and is this a longer? No, this is a short position. This is a short position. So looking for some downside. See if we draw our median lines. And the reason I draw the median line is because that's the easiest one for people that are newbies to draw and to understand. And see, we can see that prices kind of went above, tried to make new highs, and boom. Okay, and so we're looking for lots more time for this to go to the downside. Unless it surprises us and goes up, and then we have to get out. So let's see what else we have. ES, there we go. ES, still looking for much more time to the downside on this one. If you're wondering about the big number over here, that's because there's -5. That indicates 5 short. Okay, whereas in YM, which is the futures contract for what the heck is this? Dow Jones, where we got short somewhere around here. See, it says 52. That would be about here. Okay. There's only one. Okay. Let's see. And finally, soy meal. Excuse me, I'm going to cough here. What I do is I move the microphone away from my mouth so you don't get the full blast. And this was nicely in the black and now has moved into the red, so we'll have to wait and see what happens. Just for grins. There we go. Okay. So in theory, this would now be a good time to continue the downside move. We'll have to wait and see. And that's really all we've got. And that's the big deal for the week of September 18th, or the start of the week of September 18th. Remember on Tuesday, Wednesday at the latest is the FOMC thing, and the markets could go a little crazy with stuff like that. Okay, so if you want reasons to stay out this week, good reason. Anyway, take care, and we'll come over to Andrew's course. If you're not a course member yet, come on over, and we'll take good care of you. Just send an email to support@andrewscourse.com and go from there. And if you missed any of these videos, if you go to andrewscourse.com, there's right on the front page, there's links to all of them. Okay. All right. Thank you. Bye-bye.